Thanks, Keith. I think we only got about 10 minutes here, so I'm just going to actually run through our assets really quick. I'll probably spend 30 seconds on this slide. Currently, we're producing about 5,000 barrels a day. That was our forecast exit for the year. We hit that in August, so we had to up our guidance to 6,000 barrels a day. We're way ahead of what we projected. Clayton's up here with me. He's our Vice President of Exploration. Don't let his age fool you. He's a very brilliant kid. He's finding a lot of oil for us right now. Anyhow, we increased our CapEx guidance from $82 million to $110 million, and we just currently got our credit facility increased from $60 million to $90 million. We are about 50 to 60. I think we're about $60 million drawn on our credit facility right now. So the balance sheet is in great shape. We don't need to go out and raise any money to continue on with our drilling program. The very first asset that I'm going to talk about is our Belly River light oil play. We bought this property off of Fairborn last year. When we bought it, the property was doing about 900 barrels. Currently, it's producing about 2,200 barrels a day. We've had it for just over a year now. The reason why we bought this Belly River oil play is there's 400 million barrels of oil in place, and only 10 million barrels have been taken out to date. So a very, very low recovery factor in this play. One of the reasons why we know there's 400 million barrels, there's 60 vertical wells drilled into the play, so it's not, the 400 million barrels is not based off of seismic, 3D seismic, or any voodoo, I call it. It's actually 60 vertical well logs that Clayton has, and he's got 60 pieces of information that he can actually map it. So we're very, very comfortable with our actual oil in place number. Most of the production here has come out of this basal sand, which has circled the second sand from the bottom. Now what we've done this year, the big step change in our drilling program this year is we've drilled into this upper sand and the marine sand. The upper sand, we've drilled 2 wells this year. The first wells come on at IP30 is 400 barrels a day. The second well's just about at IP30 now, and it's doing 350 barrels a day. Way up, almost triple what we expected out of here. You know, we were looking at 150 barrels a day IP rates on these wells. That's what we budgeted for, and that's why our numbers are almost 3 times of what we projected. So that's why we hit our exit numbers in August as opposed to year end. The marine sand, we went in here, we drilled our first well into the marine sand. That well tested at over 500 barrels a day. So once again, it was almost 5 times what we thought that we were going to get out of there. These things are all, the upper sand and the basal sand are throughout the whole. We got about 45 sections of land in here. Those 2 sands are throughout the whole package. Between those 2 sands, we probably got 200 million barrels of oil in place just in those two sands at all. So those 2 sands are where we're going to drill most of our wells. We're probably going to focus on that upper sand more at the end of this year and the beginning of next year. We have all the infrastructure in the play, so we don't have any problem getting our product to market. We've got batteries, we've got flow lines. All our gas, the associated gas, goes to a Keel deep cut facility. So getting product to Edmonton is absolutely no problem at all. So we got a huge drilling inventory in the play. We've got 200 to 250 locations, so somewhere's $700 to $750 million worth of drilling. These wells are costing us about $3 to $3.5 million in a developmental stage. Once we get into a pure developmental play, we'll start building pads, and we'll pad drill these wells. We'll drill 6 to 7 wells per pad, and you can put 4 pads on per section of land. So the 45 sections of land doesn't sound like very much land, but when you look at our actual drilling inventory, it's absolutely huge. So it's the best play. I've been a CEO for going on 18 years now. I've never, ever bought a property like this in my life. You just don't get infrastructure, repeatable drilling, and just a ton of upside. The 30 million barrels of oil, recoverable oil. And that's just on primary. We know water flood will work in here, but we're years away from that. That's our Belly River play. We're going to be out there for a few minutes, so if anybody's got any questions, just stop at our booth there and we can go through that a little bit more. The big game changer for our stock this year, as Keith said, was our was our Alberta Bakken play. We drilled the well, this well on the star on the far right. We drilled that well in January of this year. Our original discovery well was the well on the far left. We drilled that well in 2011. That well had 3 to 4 meters of pay. The market was looking for North Dakota results. You know, they wanted 1,000 barrel a day tests, you know, like North Dakota. Didn't happen. This well had come on at 180 barrels a day for the first 3 months, or first 30 days, pardon me, and the market hated it. We went out, this year we went out 23 miles away, and we drilled that star in the far right. That well was 13 or 14 meters thick. It had 10 to 15% porosity. It was 3 or 4 times thicker than what we ever thought it was going to be, and the porosity was much better than what it did. So we followed that up with 4 more locations right around that star, and you know, everybody said, well, you got such a small pool, why are you staying so close? So we stepped out 7 miles to that middle star, and we hit another 9 meters of pay. We cored that well, and it's got 9 meters of pay. We drilled that well about 1.5 miles long. At the end of the well, Clayton took the directional bit down, and he touched the bottom of the zone. He come back up to the top of the zone, and it was 14 meters thick. So I mean, we have found, you know, 480 million barrels of oil. That's what Sproul gave us. That's, you know, myself and Clayton, I've always said, you know, we thought there was 400 million barrels of oil in place. Sproul just put a stamp on it saying there's 480 million barrels of oil in place. So I think the way this beach looks to me, it looks like it's setting up is 13 to 14 meters thick on the east side, and 9 meters, it'll be 7 meters, 5 meters, down to 3 meters. So just imagine yourself standing on a beach that's 25 miles long, and it's full of oil. I mean, that's the best way I can describe it. I mean, we've got 480 million barrels of oil in place here, and I think that number's probably going to go up. But, you know, 480, we didn't want to argue with Sproul. That was 480 million barrels is the biggest discovery in Alberta in years and years, to be quite honest. Well, I can't remember anybody discovering anything that big. So we're pretty excited about it. You know, we've got probably 200 wells now to drill in here. On our reserve report that we just announced a couple of weeks ago, Sproul gave us 227 million barrels of oil that was discovered and 250 in undiscovered. I think we've now, with our current drilling program, we're well through 300 million barrels of discovered, going to 480. I think by year end our main focus is to change that undiscovered to discovered. That's where we're going to add the most value to our stock for sure. And the market is going to catch up. There's no doubt about it. You know, Crescent Point is drilling right in amongst us now. Crescent Point just licensed 2 wells, or 2 or 3 wells, I can't remember, 3 wells, right around us. So I'm quite certain that Crescent Point is going to have success in here. We are the only company that has success in this play, and I'm not saying that we're smarter than anybody, but we're the only guys drilling this one particular sand. Everybody else is drilling the Middle Bakken sand, is what's drilled in North Dakota and Saskatchewan. We're the only guys drilling this upper sand. It's the Upper Bakken, and we're the only guys having success. Now, Crescent Point is going to come in here. They will drill it, and they should have success. I honestly, firmly believe that they will have success. So, you know, we've got 2 plays. We've got about just close to 1 billion barrels of oil in place now in our 2 plays. For a junior company, that's absolutely unheard of. You know, we've got only 15 million barrels booked in reserves. You know, Sproul, a third-party engineer, very respectable firm, has given us just close to 90 million barrels of what they think that we can recover. So, is our stock cheap right now? Absolutely. I think, you know, we're trading at $70,000 a flowing barrel. A lot of our peers that are 100,000 or plus. Is there tons of room in our stock? I believe so. I really, really believe so. Everybody always puts in a slide in their presentation, why invest in DeeThree. I'm not even going to put that slide up there because they all say the same thing. Management this, management that, we got this, we got that. I think our stock's too cheap. So that's why I'm not putting it in there. Yep, cool.
Can you give a bad resource estimate so that we can buy in a little cheaper?
Well, I don't know if we can, but I think it is. Honestly, at $5, I mean, you know, $70,000 a flowing barrel with our growth chart. You know, we're 5,000 now. We're gonna hit 6,000 before year end. I'm very, very comfortable with our numbers but that we're gonna hit our year end exit early. We've got 10 more wells to come on before year end. I think we're gonna surprise the market again. I mean, quarter after quarter after quarter, we've had nothing but growth, and we're gonna be aggressive. We've got 3 rigs drilling in our plays right now. We are definitely going to hit our exit numbers before year end. Here's just a flow chart of what we've done. You can see this well in the red is already produced. It's 4 months old. It's already produced 41,000 barrels to date. Our netbacks here are $45 a barrel. That well has already cash flowed, $1.6 to $1.8 million on a $3 million well. Unheard of economics. On our Crown land, our netbacks are 60 to $65 a barrel. That well will cash flow $2.4 to $2.6 million on a $3 million well. These wells in Canada land are going to pay out in 9 months to a year. On the Crown land are going to be 6 months. I've never seen economics like that in my life. So next year, we're going to drill 24 wells in the Bakken play and 8 to 9 wells in our Belly River play. We should exit next year, that 8,500 to 9,000 barrels a day, and that's just strictly out of cash flow. So it's, we're going to grow another 50% in production next year. Here's just my last slide. It's just the guys. We always put Casimir right at the top because they got the highest target on us. So they're at $9. Cormark's at $8. And all the rest of the guys. We got great coverage. And that's it, ladies and gentlemen. Thanks for having me, Keith. Thank you very much for having me.